Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And we're going to talk about how CCL is dead. Don't touch it. It's not going to come back. It's probably going to go towards bankruptcy unless someone buys it out. We're going to get into it and why I will not be touching this stock in any way whatsoever. Two Super Guys Trade Stocks. All right. CCL, and for that region, it's Carnival Cruise Line, also Royal Caribbean. Was it Norwegian Cruise Lines?
Yeah.
Something?
All cruise lines.
All cruise
Okay.
lines. Okay? This is not good. This is a problem. Let's get into why this is terrifying. This is going to be an old slide coming up, but Vinny actually did this equation here. Now, what this means, everyone looks at Carnival's chart and they're like, oh my gosh, it's trading at such a deal right now. It hasn't been this price since, I believe, right now, after that big crash, like 1988, right?
Oh,
This is going to
wow.
be, it's not good. This is going to be a great, 10x stock. No. They offered so many shares, and they had to. This is a really shitty situation. They had to.
Yeah.
They offered so many shares during COVID because they were essentially out of business, just hemorrhaging money for 2 years. The $40 share price is not what it was. Okay?
Nope.
So, Vinny, how did you get these numbers?
So this is a calculation called enterprise value. The reason why enterprise value is particularly useful in this case is that it allows you to adjust the share price expectation based upon the number of new shares that have been issued and the amount of debt the company has taken on, which is what Carnival had to do to survive the pandemic, is they had to issue a bunch of shares and had to take on a bunch of debt. So this allows you to compare the kind of stock price in a more apples to apples comparison rather than just looking at a chart and saying, oh, it's $7 now and it was, $48 before the pandemic. That doesn't tell you the whole story. Enterprise value is a much better representation of that.
Right. So let's look at enterprise value over time. So Vinny did these trying to compare what the equivalent share price was. So in 2019, $45 before the kind of shit show of COVID.
Yeah.
In March 2021, $28 was almost the same number, right? It was almost the same. So $28 a share would be the equivalent of $45 a share, meaning if it
Exactly.
went to $45 a share, oh my gosh, they are worth so much more money and are doing something incredible, right?
Exactly. Yep.
So unfortunately, they had to offer up more shares, and now you're looking at $11 a share in June 2022 is almost the equivalent of 45. Okay, so when
Yep.
people are looking at the 45, it just in your mind it's 11. It's
Yeah.
$11 is the fair value. Okay.
Yeah. The
Oh boy.
pre-COVID fair value, when business was doing well, people were cruising, spending money, then they lose them in a looming recession. And this is coming from a couple guys. Like I don't remember. I think you did too. But I made those my probably single largest trade in like single daily income ever was when the vaccine was announced, and I owned like 1,300 shares of Carnival Cruise Line, made like $8,000 in one day. It was fantastic.
Yeah, we had a good day.
But yeah, I got the hell out because like I knew that they was going to continue for a while and that they were not going to be able to maintain that. And this is kind of what it's come to fruition.
I think we rode that from $20 to like 25 or something. It was like an outrageous number. You had more than me. You killed it. Give us a like and subscribe for Vinny adding to his bank account there, huh?
At that time.
At that time. So here's the kind of recent headline news, right? So obviously they shit the bed, right? According to their third quarter earnings, they still have 1.6 billion in annual interest on its 29 billion in debt. Now remember, they did a share offering at like $8 when the shit was going insane, when the market was tanking.
Yeah.
That's not ideal. I don't know if they had any choice, unfortunately, but you have to keep the boats afloat there, if you will. Yeah, that was a good one.
Yeah. Smash the like button for that little joke. Yep. I like it.
Interest rates, they're only going higher. They've paid $1 billion in principal for 2022. They still have $9 billion due in 2025. Their third quarter revenue was 4.3 billion, but they still lost 770 million. Okay? This is gross. And we're going to talk about kind of how. So, this is the CEO, okay? He's saying during the third quarter, our business continued its positive trajectory, achieving over 300 million of adjusted EBITDA and reaching nearly 90% occupancy, okay? But they did that by offering people deals, right? They made the cabins cheaper. So even though you're hitting 2019 occupancy rates, you're collecting vastly less money for it, okay? So the revenue increased by nearly 80% in the third quarter of 2022. Once again, that number seems insane. You're like, oh my gosh, that's crazy. It's because it was so low before that, right? It seemed incredible. Not incredible, okay? Not at all. So they're getting back to levels, but here's the issue. I'm going to make this real simple. I don't need to go into numbers or financial reports or any of that. It sucks. The problem is you have recession fears. Therefore, vacation going to happen less. People are going to save money. You have increased interest rates. Their interest on their horrible loans that they had to take out is going to get worse. Okay? The cost of fuel is going higher. The cost of food, which is their biggest two things they have to buy for their ships, fuel and food.
Yeah.
You seen the food being hauled in on those ships?
Yeah, it's a fantastic documentaries on that sort of stuff, and then just unloading and reloading within 8 hours, getting back out to sea. It's pretty cool to watch.
It is wild. The problem is you're like 8% inflation on food, and I do think fuel is going to go higher. Hurricanes are a pretty low risk here, but literally you have a company who had to take out massive amounts of debt, okay? Then have 5 or 6 different headwinds going into possibly the worst economic situation we've been in for like 5 years, and before that since like 2008. This is not going to end well. Okay, I'm gonna pull up the SPY here, but let me get out of this.
Whew, look at that volume bar. That's pretty crazy.
Not good, bro. Not good.
Yeah.
Now, these two levels here, this 809 and the 780. This 780 was the low of the pandemic. We shot below that by a whole nother 80 cents. 80 cents is a lot when your stock is $7, right?
Yeah.
This is not good. If you are in this stock, I honestly don't even know what to do. This is rough. I don't see this recovering. I would zoom out and show you the last time that this was here, but you can't see anything because the lines get too small. I already tried. So this is a problem.
Crazy.
Yeah,
we're seeing Carnival Cruise Line head for penny stock status, and then maybe even like full on like bankruptcy risk. I mean, you have to obviously run a lot more numbers to kind of quantify whether or not they have a significant risk of bankruptcy. But
I think they do. I think the problem is they took out so many bad loans out of necessity. I don't think that this was mismanaged, to be honest. I think that a shitty situation happened and they had to do what they had to do. But unfortunately, the economic outcome of what happened from COVID is going to hit them the hardest out of any other sector or section of stocks. But look at this 5-minute chart. Like, it was just unrelenting. Like, they came up and they just died.
Wow.
It's crazy.
That's pretty crazy. That's but on the positive side, they have Shaq's Big Chicken. I'm not sure if you've heard about this place. It's supposed to be pretty good.
I have not. Admittedly.
It's basically Shaquille O'Neal's version of Chick-fil-A, but I was actually looking at sailings out of Port Canaveral on the Mardi Gras, which is like their flagship, and I think it was priced it out, and it was a balcony cabin for my wife and I. It was going to cost us like $3,000 for like a week.
Okay. Yeah. Now, they did say something interesting on the earnings call. They were saying, look, if you compare that cost, the $3,000, to how much it would be to go to a destination, have the flight, the hotel, the food, it's way cheaper. And how they almost have to get away from that to stay afloat.
Yeah.
Another one.
Well,
boom.
In comparison, a week on Norwegian would cost us probably about $5,000 to give you an idea of how much cheaper they're having to sell products for with Carnival, and that's on their flagship. I didn't price out Norwegian's flagship.
Yeah. Well, What price would you go long Carnival?
I don't know if I would touch it. It
I'll
is
do $1.
penny stock status to me.
If it hits $1, I'm not touching before then. I'm not going to try to swing it. This is a nightmare.
Yeah,
You know, it is what it is. Stay away from it, guys.
that's my thought. See you guys in the next one.